everyone, thanks for joining in. So just a quick sound check and then we can get started. I think we do have a bit of time to talk about stuff here. We're gonna explain what CPI is, and we'll take a look at the previous CPI results and give you a little bit of tips and tricks on trading CPI. It is a little bit different from trading the NFP numbers. All right, so this is news trading session 3. We're going to talk about inflation, CPI, and we are going to be live trading the US CPI number tonight, today, this morning, depending on where you're from. All right, my name is Viranjaro, and let's get this started. I think the audio seems to be okay. Just a quick disclaimer, any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. Okay, so keep that in mind when you're trading. All right, promo code, obviously, we're going to be doing that promo code. That's still going to be valid until next week, 17th of May. And then there's going to be an invite to the private Telegram channel through emails. So make sure you register this webinar through the OctaFX website to get that, I believe. All right. So what we're going to talk about, we are going to talk briefly about what inflation is, what's the CPI, what's the core inflation or the core CPI, and then obviously we're going to take a look at a real-time example of the CPI trading itself. Okay. So here is the promo code. If you want to use it, it's going to be non-farm 2023. All right, this is going to be doubling your deposit bonus. You can use this until the 17th of May 2023. Okay, so hopefully you guys been getting some good understanding, at least kind of the mechanics around news trading in terms of the order types that we are going to be using. For tonight, we are not going to be using the limit orders. We are just basically going to be focusing on the stop orders, and that's basically how you trade the CPI numbers anyway. Okay, so this is the code. It's non-farm 2023, and you can use that code until the 17th of May 2023. Okay, so let's talk about inflation, right? So inflation is the rate at which prices for goods and services rise. The most commonly used inflation indexes are the Consumer Price Index or the CPI, and then we'll take a look at the core inflation or the core CPI, right? It's basically CPI, but we are excluding some of the stuff there. So the CPI, it's a critical indicator of pricing pressures in an economy. It provides you with a gauge of inflation. So Forex traders monitors the CPI as it can lead to changes in monetary policy by the central bank that will either strengthen or weaken the currency against the rivals in the market. So let me go through a little bit about what CPI is. Okay, so CPI measures the cost of living. It includes broad range of goods and services purchased by consumer, includes international personal consumption items as well. Scope excludes changes in interest rates or costs. So that's the CPI. That's the data that's going to get released today. Tomorrow, there's going to be a PPI number. Now, the PPI is, so if we take a look at a CPI, it says consumer, right? And then the PPI is basically producers. So PPI does a few different things. It measures real growth in output, includes items produced for personal consumption, does not include imports because they're looking at domestic production numbers, prices, encompasses services with prices including an interest rate component. So we've got CPI, PPI. So just to put it bluntly, let's make it simple. CPI, it's what you guys pay for goods and services. The PPI is how much the producer, how much it costs the producers to produce that goods and services that the consumer purchases. So CPI and PPI, two different things. Typically CPI carries a little bit more weight, obviously, but depending on the situation, like the COVID pandemic that started, we pay closer attention to the PPI number as well because of the the supply side issues, the PPI went up first and then the CPI went up. So there's going to be a different webinar to talk about the CPI or the inflation in details in terms of how the mechanics is, what are the different type of inflations there are. But just to keep it simple, inflation is basically how much is the cost of goods are. And inflation is something that's unavoidable. So you are going to see inflation increases year over year. Just for a comparison, purchasing something 10 years ago, it's probably cheaper than purchasing some of the goods nowadays. And the best example for me would be purchasing a high-end or a flagship mobile phones. 10 years ago, it's roughly around 1,000. Nowadays, you can barely get anything flagship around $1,000, right? If you really want top of the range iPhone, for example, you're gonna fork out a lot more. Now, depending on the countries, obviously, it's going to vary. Okay, so inflation is something that happens, and inflation is something that the central banks monitor because the main purpose of a central bank is to keep price stability. A high inflation or an extremely high inflation is not a stable price. Therefore, they need to increase interest rate to bring inflation down. The whole point is this. Inflation happens because people spend, right? And the interest rate that goes up is to prevent people from spending. So they gave more of an incentive for people to actually save up. Things are going to cost a little bit more. If you borrow money from the bank, it's going to cost you with a higher interest rate. If you save in the bank, it's going to give you a much better interest rate. So that's the kind of mechanics to control price. Now, this would fall under what we call the monetary policy. The fiscal policy, it's to do with taxes, right? So inflation falls under the governance of a central bank. That's the job of a central bank, to take care of what inflation is, just to stabilize things. Okay, so that's general brief overview of what inflation is. So let's take a look at what core inflation is. So core inflation is basically looking at the CPI numbers, right? Looking at the inflation numbers, and it basically refers to changes in prices of goods and services, excluding those from the food and energy sectors. Now, with the core CPI, there's been a few changes in recent times. Like, I'm not particularly sure about how the US calculate this and what food kind of contributes into the actual core CPI, but some foods are actually included in the core CPI nowadays, and that's something that we need to focus. Okay, so typically, the CPI number or the headline inflation number, that's typically higher than what the core CPI is. Core CPI is typically a little bit lower, but now we are looking at a little bit of a different situation because the core CPI in the US is actually a little bit higher. Okay, right. So the excluded items are typically oil, energies, and high ticket purchases like cars, right? These items are excluded from the measure of inflation because their prices are more volatile, typically more expensive. So core inflation is basically determined using the CPI itself. Okay, so tonight's number, and I'm going to show you that in a little bit, but we're looking at 4 different set of numbers. So you might look at inflation. So what is inflation? Inflation, if you want to take a pen and note this down. Inflation is basically, headline inflation is basically CPI year on year. That's your headline inflation. And then we have the core CPI year on year, and that's what we are going to be looking at. And then we have the inflation monthly gains, core inflation monthly gains or losses. So yeah, you're looking at 4 sets of data instead of just, inflation. No, inflation doesn't come alone. Inflation comes with 3 other friends. So they're like Ninja Turtles, right? You've got 4 of them. All right, so I'm gonna show you the economic calendar for today. I'll give you a little bit of a view into things here. So let's take a look at the inflation rate year on year, right? This is expected to come in at 5%. Previous number was at 5%, and if I were to show you the US inflation rate here, this is basically what it looks like. So we've been looking at an inflation that's been dropping down basically since June 2022, right? So we have been slowing down. The inflation has been coming off, and if you take note on how much interest rate hikes that the FOMC has done, it's exactly 5%, right? It's 500 basis points, and 500 basis points basically takes inflation down from its peak at 9.1% to 5% last month. Okay, so if you notice the drop, last month's CPI was something that was a little bit unexpected, even by my standard. We're not really expecting a drop of 1%. So we might see the inflation stabilize a little bit, but the way we look at the inflation number is pretty simple. If inflation is high, then the central banks, in this case, it will be the FOMC, needs to consider hiking interest rate against to control that interest rate. Okay, so their goal, the target, for pretty much all of the economies out there, the target is generally at 2%. Right, so it's either 2% or 3% target, but right now the FOMC is targeting 2%. So they want to hike rates until inflation go back down to 2%. Okay, doing a pretty good job, I'll be honest with you. They took inflation down 9.1% to 5%. That's nearly half of it. So yeah, if the CPI numbers, this is what we're going to be looking at first, right? It's the inflation rate year on year, or this consumer price index year on year, depending on the calendar that you look at, but it's basically the same thing. This is the headline inflation. So the expected headline inflation, if we take a look at the previous number, is 5%. The expected inflation rate is also at 5% this month, right? So last month, basically. Not expecting a change. So if inflation doesn't come down, all right, if it stays at 5%, it's actually not going to be a concern to FOMC. FOMC does not need to hike interest rate. However, if interest rate comes in at a number higher than 5%, then the FOMC will need to do something. Now, we need to look at what the FOMC has been saying last week, is that they might actually pause interest rate, right? However, if interest rate data that we're looking at today goes up a little bit higher, then there's going to be the concern in the market that the FOMC needs to continue hiking interest rate. That's the number one. And unlike the NFP numbers, this one is a surefire thing. Like if we see a higher inflation number, that's going to cause a lot of concern in the market. That's going to boost the US dollar. And then with the thought that market is going to price in that FOMC is going to hike interest rate, that's also going to boost the US dollar. Okay, so if we see a higher inflation number than what the consensus is, then yeah, we do expect the US dollar to get stronger. We do expect the euro and the pound to come down a little bit. Right now, we can go into details, but I don't really want to go into details in terms of the difference between ECB and FOMC in terms of their stance. But I'll just go straight to the point that the market is right now pricing a little bit more of a hawkish ECB and a dovish FOMC. So that's probably why you see that surge in the euro. All right. Next one, it's core inflation year on year, and there's another name for this one here. It is also called the underlying inflation. Okay, so this core CPI, it is actually much more important than the headline inflation. Now, if we take a look at the core CPI numbers, this is still at 5.6%. The expected drop is for a drop to 5.5%. But yeah, this is the core CPI. But if we take a look at what happened last month, instead of getting the core CPI to go down, we actually see core CPI go up from 5.5% to 5.6%. Now, the expected drop for today is actually going to be from 5.6 to 5.5%. However, if we get a number higher than 5.5%, even though the headline inflation is below 5%, for example, or it comes out at 5%, the core CPI could be a concern as well, that the FOMC needs to hike rates again because the underlying inflation remains high. So with every inflation, there's going to be three scenarios. Scenario number one, we're going to get per consensus, everything is exactly the same as consensus. Our scenario number 2, we could get a inflation number that goes down, the core CPI that goes up, or we could get a inflation that goes up and the core CPI that goes down, right? So there's always going to be 3 different scenarios to kind of think about when you trade CPI numbers. And then next one is we are going to take a look at the monthly CPI numbers. Now, if we take a look at the monthly CPI numbers, we're expecting an increase from 0.1% to 0.4%. And then the monthly core inflation is to remain stable at 0.4%. So I'm going to show you, just trying to figure out a little bit here in terms of where the charts are. Okay, there we go. A little bit far behind, but yeah. Let's scroll back and I'm gonna zoom in. This is what happened last month during the CPI release on the 12th of April. Now, if we take a look at it, we're basically doing the same thing. We're boxing the range and then we do a buy stop and a sell stop, and we're going to take a look into that a little bit. But just to give you an illustration on what happened last month, it was a huge surprise. We basically see inflation shoot up, and last Monday we talked about how the market kind of consolidates, right, and then breaks and then it terminates itself. This is basically the phase that we were talking about on Monday, and that's basically how it's going to play out as well today. Now, depending on the numbers itself, there are a few concerns to consider. There might be a possibility that the market could actually whip and then go the other direction. So you can take both of your stop orders at the same time. So that happens if you don't give enough space in the market. So yeah, the minimum that you should go to in terms of creating that range would be on the would be on the 50 minutes time frame. But depending on whether or not the market has moved, you might need to go up to the hourly time frame to kind of get your levels straight. Now, let's talk a little bit about how you can actually trade this. Trading the CPI numbers, unlike the NFP numbers where we can fade it, we don't expect any fades during the CPI numbers. And CPI right now is so important because it's kind of the biggest or the largest deciding factor that the FOMC or any central banks would look at to make a decision whether or not they should be hiking interest rates. Okay? So, typically with trading the CPI numbers, if you're familiar with trading the UK breakout and the US breakout, you are basically trading the US breakout. So we are typically looking at, most of the time, the same direction as what the UK breakout does. Okay, so if we go back a little bit here. Okay, so with the Euro USD here, on this particular day, we see a little bit of a break to the upside during the UK session, and then the US session pretty much just follows through in the same direction. So it's not a guarantee, but it kind of gives you a little bit of a hint in terms of where the direction is likely going to be. Okay, so here we've got the pound USD. We already have a little bit of resistance at 1.2650. We're going to use that as our buy stop, and in terms of looking at sell stops, we don't have that yet. So I'm just going to go into the MT5 here. So I'm going to limit that at 1.2650. Okay, so just slightly higher, about 1.2650, right? That's where we want to have our buy stops. I want to have it at 1.2650, okay? Yeah, 1.2650, just about there. So that's where my buy stop is. I want to have it at 1.2650. Now, if we take a look at this, this is on the hourly time frame. If we go into the 50-minute time frame, you know, you kind of still need to figure out where you want to place it. You can have it two ways. You can look at the hourly time frame, right? Because CPI is something that's pretty volatile, so it'll typically shoot straight in one direction. That's something you need to be concerned about with the CPI numbers. And in terms of placing orders, right now it's about a good time to be looking at where you want to place your stop losses. Sorry, your stop orders, right? Either, but we need both sell stop and a buy stop as well. So take a look at the pound USD. You got a couple of options. You can use this low over here if you want to have your sell stop over there, or you want to play it safe a little bit. You want it to be really out of the range, depending on how you trade, really, right? You can have it a little bit lower as well. Now it might look like it's a huge difference, but it's only about 30 pips of a distance. Okay, so I think we can go into the 15-minute time frame right now. And I think we can use this as a sell stop order. Might adjust this a little bit lower. I want to have it a little bit lower than 1.26, so I will have it about 1.2595. Don't be too concerned about the pips here. Just make sure you protect yourself first, right? Okay, so we got that done for the pound USD. I've got one order at 1.2650 to buy. To sell, I've got one at 1.2595. You can have it at 1.2590 as well. So you know what? I actually go for 1.2595. It's perfect for me. All right, Euro USD. We got a clear buy stop. This is a no-brainer. We've got that over there. Now, the sell stop, this is problematic because you can see prices is still going down right now. If you place your order right now, it's going to be a little bit too fast, a little bit too early. Now, if we go into the hourly time frame, we actually don't have a lot of options, right? I mean, that's kind of the bottom for it. We're looking at a little bit of a base for the Euro USD. So I might actually take, something that's a little bit lower, right? I'll actually be looking at about 1.0925. Just to give it a little bit of a distance, right? You can have it a little bit higher if you want to. I think the closest would be at about 1.0930. That's kind of really pushing it. I much prefer to give it a little bit of a range here. I want to have it a little bit lower. Maybe just have it at exactly at 1.0930. I think that should give enough room. I just don't want the orders to get triggered before the CPI number gets released because it gets really volatile, right? Market moves really quickly. Sometimes it moves before the CPI. You got people adjusting their positions and stuff like that. So yeah. So with the next one, it's going to be the dollar Japanese yen. The dollar Japanese yen. This is on the other time frame, so you can have a buy stop. I think I would have it a little bit higher, maybe about 136.60. Sorry, 135.60. Yeah, I want to give it a little bit more room. In terms of the sell stop for the dollar Japanese yen, I could have it at 135. I think I'm pretty happy with 135. So this one here, in terms of adjusting your stops, your orders, don't look at the swings for CPI. You really want to focus yourself more on whether or not there's going to be significant key levels in the market and stuff like that if you want to do your orders. Now, with the dollar Japanese yen, this is actually on the hourly time frame. If I go into the 15-minute time frame, this is basically what it looks like. So I think there's ample room for the market to do so. And then the next one for the Aussie USD, this one here a little bit tricky. All right, I would actually have my buy stop just about 67.75, and in terms of the sell stop, I would actually want to have it a little bit lower at about 0.6725. Okay. I'm gonna adjust that there. So I'm giving it room. I don't want to place my order too close to where the current price is. So before you trade the CPI numbers, if you're trading during news release, right? Obviously you got the option to place your order by looking at the expectation from the consensus. You can also trade it during the CPI. I'm more on the guy that trades after the CPI. So I'm a swing trader, so I really wait for the news to kind of went by. I've got time to think about it. But topic for tonight is actually how to trade CPI during release. So this is what we do, right? You want to look at the range that the market has provided. If you're getting confused looking at it on a 15-minute time frame, like, oh, where should I put my orders and stuff like that, I would say go with a higher time frame, because we do expect extreme volatility during CPI. And yeah, range doesn't matter. You really want to be placing your orders not too close to where the current price is, just in case, you know, your position gets triggered, market opens up before the news gets released. Okay, so those are the four majors, right? The pound USD, again, I got one at 1.2595 for a sell, a buy stop at 1.2650. The Euro USD, I've got a buy stop at 1.0980, 1.0982, right? I got a sell stop at 1.0930, just to give it a little bit more room. The dollar Japanese yen, I've got a buy stop at 135.60, just 10 pips higher than 135.50. And in terms of a sell stop, I've got one at 135, okay? For the Aussie USD, I've got a sell stop at 67.25. I've got a buy stop at 67.75. And if you guys are curious why this numbers, because these are psychological levels in the market. So that's what we are eyeing for. Now, what about yen crosses? If you guys are trading yen crosses, how does the CPI affect the yen crosses? With the US related data such as the CPI and NFP, it doesn't have an impact on the yen crosses directly, but it will indirectly have it. So if the Euro USD comes to a sell-off, then the Euro yen might get pressured lower. However, if the dollar Japanese yen gains, right, the Euro yen could actually gain with the dollar Japanese yen. So these are going to be a little bit of an exception in terms of what you should be looking to trade for the CPI numbers. All right, yeah, 4 minutes remaining. Okay, so someone was asking gold, what should we do with gold? Gold, we actually do have a little bit of a range as well. You could go for a buy stop over there if you want to. In terms of a sell stop, I would have it a little bit lower. I would have it actually lower than 2020. I would actually have it lower than 2020. So I would actually have it maybe about 1950. You know, just give it a little bit more room. But you can have it at about 2040 for your buy stop, just to give it a little bit more room. Sell stop at 2020. So I think this is enough room. We're giving $10 up, $10 down. I think we are right in the middle right now for gold. So yeah. But yeah, the main focus would be on the currency markets. We're just waiting. We're just waiting for the news to get released, and I'm gonna go through some of the questions very, very quickly as well. My opinion on the dollar Japanese yen, really tough, right? Dollar Japanese yen, as I said, it's kind of the push and pull because of the safe haven assets side of it. But we're looking at about 135 as a support right now for the dollar Japanese yen. I have a buy position in Euro USD. Is it okay? It might get a little bit dangerous, because if the CPI numbers doesn't fall down, if it doesn't come in at 5%, or the core CPI doesn't drop down, it could be a risk for Euro USD long. However, if CPI drops down below 5%, significantly below 5%, I think the Euro USD could be okay for a long. Gold, sir, up, down. The market is not just up and down, you kind of need to figure out the stuff here. Buy stop for the dollar Japanese yen, it's at 135.60, just 10 pips above 135.50. Sell stop at 135. Should be enough room. All right, any minute now, we're gonna get the numbers, but we should typically look at any minutes now. Maybe we should look at the euro. I think this one here is kind of pauses a little bit, just waiting for the numbers, right? Oh, by the way, there's always that risk that orders get delayed. spread gets wide. This is common in terms of liquidity drying up during news releases and volatility as well. All right, any moment now, we should see a reaction in the market. All right. Okay, that's one of the orders got triggered. I think the dollar Japanese yen got triggered. Inflation rate is at 4.9% is actually lower. All right, lower than 5%. And core CPI was 5.5%. So we are actually looking at a drop in core CPI and the year-on-year headline inflation as well. So we've got 4.9% instead of 5%, which is lower, which is great. So we see inflation coming off. And then the core inflation also drops down 5.5%. I'm just looking at the monthly numbers. It's at 0.4%, so the expected increase from 0.1%. Core inflation remains stable at 0.4%. So yeah. So we already got one running. The dollar Japanese yen pretty much is running. Everything else, because I put it a little bit higher, now it's just getting triggered, right? So we are looking at the market moving right now. So pound USD is triggered, Euro USD not triggered yet, dollar yen triggered, Aussie USD triggered, and yeah, it's off to the races right now. Should we cancel the other order because the Aussie USD got triggered? So I'm gonna cancel the Aussie USD. I'm gonna cancel the pound USD. I'm also gonna cancel the dollar Japanese yen. Gold, surprisingly, should be filled. Yeah, anytime soon. But yeah, that's how you trade CPI, guys. I think it's a much straightforward process than the NFP numbers. For CPI, once it runs, and it's just as simple as that in terms of how you can actually trade CPI. We can go into details, obviously, but I kind of give you a brief rundown on what the CPI is, the context of it. So right now, does the FOMC need to hike interest rate in May? Probably not. So I think market could start pricing in today that they might actually not need to hike interest rates in May. Okay, so that's how we look at the inflation numbers. I just put a sell stop on the pound USD. Is that okay? I would cancel the sell stop actually, because I think the buy stop got triggered for this one here. Now remember, I was actually giving this one here a little bit more room, right? Something just got triggered again. The Euro USD just got triggered. Now everything's running. So I'm giving it a little bit of a room for this one to go, and I'm not really too concerned because, as I say, with CPI, it's okay to give it a little bit more room, right? So no rush with the CPI numbers because it takes time for market to process what the CPI is. For example, today, we might actually see a little bit of a run to the upside during the US Open when the equity market kicks in and everyone's looking at, hey, it's a low inflation number. So they might start pricing in that the FOMC might not need to hike interest rate. Gold got triggered, which I don't want to. I don't trade gold, but yeah, anyway, gold got triggered as well. But yeah. So yeah, it is what it is. So we already trade this during the news. Now what happens next? Okay. So if you don't get in during the news, okay, which is what we're looking at, we can do a couple of projections as well. Take a look at where this pauses. All right, and if I go into the 50-minute time frame, and this is on the pound USD, and I'm going to project my extensions. This is pretty much capped at 127.2% extension on the 50-minute time frame. So if you are a short-term traders, you got your pips, you can get out now if you want to. Okay, but if you want to turn this into a swing trade, because if we take a look at the previous release. And I'm going to scale out a little bit. from that one CPI release, the market does go up a little bit of a distance, but it just takes time. But the initial run is typically we run up, right? If I zoom in to last month's number, just to give you a comparison. So this is the candle you want to be focusing on. We typically see a little bit of a high, and then the next 15 minutes, we might actually see price pull back down a little bit. So if you missed out the initial trade, I'm not too concerned because we kind of got a little bit of a guidance in terms of what the FOMC is going to be doing, what the market is, the sentiment is expecting. So, but yeah, this pullback on the second candle, all right, which is this one here. This is typically more on the initial profit taking, but that's pretty much it. So if you are in it and you want to get out, feel free to get out if you got enough, right? But if you want to stay in the trade, don't be too worried. The next 15 minutes or the next 30 minutes, it might come back down a little bit, and it's kind of okay because technically we're still capped, right? We can go a little bit higher. We can still go to 161.8%, which is at 1.2670. All right, we've got a little bit higher, 1.2675, and we got momentum, right? We got momentum here pushing up right now. So if we take a look at the momentum on the pound USD on the 15 minutes time frame, we've got momentum behind us. So I'm not really too worried that I need to close my positions off right now for the pound USD, right? Let me just close something because I don't want gold, right? I don't trade gold, and I don't like having that triggered anyway. But yeah, gold got triggered. I don't like gold just because I'm more focused on the currency side. But yeah, just to give you an example, because someone was asking for gold right now, so I'm not into gold, so I just close out my position on gold. Don't want to dirty up my good running numbers here right now for everything else. Okay. Okay, so yeah, let's zoom out a little bit, okay? And I'll go through the pound USD levels. So with the current move right now, do we have a significant resistance for the pound USD? Yeah, we actually still have a little bit of resistance for the pound USD, and that's the 26th of May high, 26th of May 2022 high. At 1.2670. Once we go past that 1.2670, now, and this is in line with the 161.8% on the 15-minute time frame. That's likely going to be profit taking at about 1.2670, just because that was the 12 months high for the pound USD. So that's a 12-month resistance for the pound USD. So you might actually see potential profit taking coming in at about 1.2670. So if you have a long positions right now, or it's running, it's doing great, you want to get out at 1.2670, I think you should think about it if you are not there for the long run. But if we break above 1.2670, I think it's a worthy reward, because beyond 1.2670, we actually have a lot of move to go to the upside, potentially towards 1.2850 as well. So yeah, any targets to take profit? Yes, we're looking at the targets right now. So for the pound USD, let's go back to this and go to pound USD. You can think about getting out at 1.2670. That's the shortest one. But I mean, looking at the current situation and depending on whether or not we surpass 1.2670, I might actually go for a little bit of a higher target for the pound USD. I would go for 1.2750. I would go for 1.28. I would go for 1.2850 as well. So you got a lot of options. So let me just adjust this. So I like the middle way, 1.2750. Now you need stop losses, obviously. So if you got this triggered during news release, right, you want to have your stop loss. Now you got a couple of options. Can you use the swing before the run up? You could, right, but it is a little bit risky because it's exactly at 1.26. But if you want to have your stop loss there, you can have it there. Okay, but I would typically give it a little bit more room. I would have it about 1.2575. So yeah, I would actually go for 1.2850 actually. Think it gives a much better risk reward ratio on the pound USD. But if you're trading this on a 15-minute time frame, this is good. You should be getting out if you have a position early. But if you're wondering where to get out in the short term, where you might actually see rejection in the next 20 minutes or so, it would likely be at about 1.2670 for the pound USD. For the Euro USD, I think we can go a little bit higher. In terms of short-term targets, you can go for 1.11. All right, I think 1.11, it's great. Now, in terms of stop loss, obviously, if we look at 1.11 to get out, I don't think that's a very good proposition because your stop losses are going to be way down here, below 1.0950, right? So think about it, depending on how you want it to be. Do you want to keep this for a short-term trade? If you are keeping it for a short-term trade, you can get out if you want to, but if you're thinking longer term, then I would actually go a little bit higher in terms of target. I would go for 1.11. I could go for 1.1. I could go for 1.1175 as well, but happy with 1.11. I don't think we have reached 1.11, so we might be a little bit overshooting that. But yeah, I'm keen on 1.11 on the Euro USD. So risk reward ratio now makes a lot of sense, right? The dollar Japanese yen. This one here you can't go for long because you actually need to consider a potential support coming in at about 134.50, but I think we surpassed that. So you could only go for maybe about 134 or 133.50 at best. So just for the sake of this one, I would go for 133.50. In terms of stop loss, you really want to keep it tight. This one here, you just want to have it about 135.50. Okay, so don't put your stop loss too much on the dollar Japanese yen. Okay. For the Aussie USD, this one here, target-wise, can we go a little bit higher on the Aussie USD? I think we can. So I like using my Fibonacci as extensions as my target level. So yeah, let's shoot to the moon for 161.8%. In terms of stop loss, I would have it, just slightly below 67.50. Just about there. Pretty happy with this. Looking great. Okay. So yeah, it might seem like it's a huge candle and whatnot, but in reality, let me just take you back down to perspective. This is only about 50 pips, so could be a little bit better, right? But we're just not looking at that much of a surprise. It's only 0.1% lower than the consensus, but it is still lower. And the way we look at it, we compare the core inflation, it came down. It was 5.6%. It's down 5.5%. Headline inflation is also down 5% to 4.9%. I don't think we have any revisions from the previous month on this one here. But yeah, that's pretty much it. I think we still have room for this one to go. To us who bought gold, to you guys, if you guys got in on gold, but I'm not into gold, so yeah, that's probably why I just got out of that position. Pound USD 1.2650. What if it doesn't close above it? Pound USD 1.2650. What if it doesn't close above it? We are already at 1.2650. We're already at 1.2659. I'm not too concerned about 1.2650 for pound USD. I'm more concerned about 1.2667, 1.2670, right? I'm a little bit more concerned on resistance too on the daily pivot at 1.2670. I really want to see that close. But momentum-wise, I think we still have a lot of room to go, so I'm not really too concerned. And I think the direction of where the market is and the pricing in onto the consensus, I think the lower than consensus 4.9%, I think that's a little bit of a positive surprise as well. Can tomorrow GDP inflation affect the pound USD, or the trend will continue? Yes. Tomorrow is not GDP inflation number. Tomorrow is actually the monetary decision from the Bank of England. So if the Bank of England doesn't hike interest rate tomorrow, this is going to be that wild card. So we're sidestepping a little bit, but I'm answering questions just in case anyway. There's going to be two more risk events for the sterling. It's going to be the Bank of England tomorrow, whether or not they're going to be hiking interest rate. That's number one. I think they should hike interest rate, but the question would be how does Governor Bailey respond to the inflation not coming down below 10%, right? So yeah, since we're talking about inflation, so let me just give you inflation numbers for UK inflation, right? So this is United States, and I'm going to bring out United Kingdom. Okay, where is it? Inflation rate. There we go. So inflation for UK, it's still above 10%. So yeah, every country is going to have different inflation. So we saw a significant drop for the US, but for the UK, the drop, it's not really consistent. It's not really huge because from October 2022, when it peaked at 11.1%, the drop has only been to 1% drop, not really significant, and then it went back up to 10.4%. So with Bank of England hiking interest rate, it's basically doing nothing. But you need to keep in mind what's going on with the UK as well, because the UK has a little bit of a problem with the fiscal policy right around October last year as well. The GDP growth has been really, really slow. In fact, if you want to call what's going on with the economy in the UK as a potential mild recession, yeah, we can actually categorize that as a potential mild recession. So yeah, UK, we're really far off from that 2% target, still at 10.1%. So the Bank of England needs to hike interest rate tomorrow. But what could kind of reverse whatever happened with the pound would be comments from Governor Bailey. If he keeps saying that, I think we think the inflation is going to come down sharply very, very soon. I think that kind of comments is going to hurt the sterling. The second thing would be on Friday, where the GDP growth is expected for the month-on-month GDP numbers. If it stays at 0%, then its GDP is at 0% for consecutive 2 months. Okay. So yeah, so there's a lot of stuff we can look here. We're looking at inflation rate. We can look at GDP growth rate as well. But there you go. It's all in there. You just need to know what to look at. So the euro area, if we take a look at the inflation rate for the euro area, this one here is coming down really, really okay. It's just that the core inflation is just a little bit persistent, a little bit more sticky. Okay, so now price is very close to 1.2670. We started a new candle right now. This is basically the next candle before the hour closes. Now take a look at what's happening right now. We're actually seeing a little bit of a stall in the market. So if you want to get out, get out. If you want to stay in the trade, stay in the trade. But if you trade the CPI numbers, right? Just as an example, on the pound USD here, we are very close to resistance at 1.2670. If I want to take my profit, I can get out right now, and just simple as that. But I think I want to go back in because I like the pound USD, and I think this one here can go a little bit higher. But yeah, just to give you an example that, yeah, if you want to get out, post CPI numbers, obviously you got a couple of traders, right? Just for the purpose of news trading, get your pips, get out, right? If you see 15 pips, 20 pips, 30 pips, 50 pips, that's great. If during news releases you get this kind of pips and you want to get out, you want to be done for the day, that's the whole purpose of this news trading series, right? Trade, get out, be done with it. All right, you can actually get out. I like Aussie USD, very close to $200. I like dollar Japanese yen. I just close it out, and that's fine. Euro USD 50, it's kind of stalling. It's not really stalling. It went up, but I put in my orders a little bit further ahead because I'm aiming for the pound USD and the Euro USD to go a little bit higher. But yeah, so take a look at the history, with the exception of the gold there, because I don't really want gold there. But yeah, even with gold damaging the whole thing at negative $315, for what it is, you're only trading the market for like 15 minutes, and that's how it is trading the CPI numbers. And if you're just in here for the news, right? You don't care what happens tomorrow. I think you should close out your position based on the first candle if you want to. But if you want to stay on, then yeah, you can stay on. And for the Euro USD, I'm staying on. But for everything else, it's really a choice. You want to stay, you want to go. But typically on the 50-minute mark, a lot of traders kind of get out of their positions. So that's basically what it is. Okay. Could get a lot more, but just for the sake of, the purpose of news trading, if you want to make it quick, you want to make it simple, 50 minutes, you want to get out. Simple as that. 30 minutes, you want to get out. Okay, but we're looking at a different thing right now, but this is just for trading purposes, example purposes on how you trade the CPI numbers. So I'm not really too concerned that the market's going up right now. So if you still have a running positions, I gave you the targets. More than happy to give you the targets as well. But yeah, Aussie USD, you can go for a little bit higher. You can go for a 68.25, 68.50. Dollar Japanese yen, not really too keen on the dollar Japanese yen because you got a couple of support level to think about, right? You got 134, obviously. And then below 134, you got 133.50 if you want to go for your target levels. Okay, in terms of stop loss for the dollar Japanese yen, so I'm just going to draw horizontal lines here, but yeah, you really want to have it about 135.50 if you have a dollar Japanese yen position. For pound USD, as I said, gonna go for a little bit higher with pound USD. Now, in terms of stop loss, obviously, let's think about stop loss. I really want to have it a little bit lower at about 1.2575. In terms of target level, I am happy with 1.2850 because that's the kind of the daily extension for pound USD. Euro USD, this one still remains at 1.11. You can have your stop loss slightly lower than 1.0950. Okay. Could you expect this data could bring the dollar index down to 101 support line this week? Wow, 101 is a huge call. But it could, yes. It could. It could bring it down to 101. We still have, the major support wouldn't come in at 101 anyway. It would come in at 182. But yes, can it bring the dollar index down to 101? I think so, yes. With a number like this, and we don't have anything else. We've got PPI tomorrow. But I think with the PPI, let's quickly take a look at the PPI just in case, okay? PPI, it's tomorrow, same time. But we're looking at the core PPI to also go down from 3.4% to 3.3%. Month-on-month PPI, though, expected to go up from negative 0.5 to 0.3%. Not really a huge deal. That kind of gains on the monthly PPI is not a huge deal. I think if we take a look at the core PPI year on year, is still expected to drop down 3.4 to 3.3. Year-on-year PPI 2.7 to 2.4%. So I don't think it's going to have much of a huge impact unless we get an extremely crazy number like 1% higher than what the consensus is. But yeah. Thanks for the profitable day. My pleasure. I used the concept on Fibs based on the previous webinar. Made my first successful trade. Many thanks for valuable information on sharing it. My pleasure. That's the whole goal. I like to see that kind of comments. I really love it. If you guys, if what I do, what we do helps, give us that good positive feedback, then we know what to focus on and provide you for future webinars, right? What do you guys need and stuff like that. Okay, so you can use the code again. You can use non-farm 2023 as well for the code. I'm gonna stay for a little bit. I'm done with the trading part, right? But if you get any questions, we got time. We still have time for this session. But yeah, if you wanna ask, oh yeah, I think there's gonna be a polls coming out. But if you can stay here a little bit, fill in the polls. But yeah, this is the code. I'm just gonna leave it there while we take a look at the market again. But I think necessary adjustments has been made in terms of stop loss and target levels. I think this is great, right? Good thing I reopened the pound USD. I think that's a great trade. But yeah, look, just as a disclaimer purposes, I already have a long pound USD position, and I don't have a euro USD position. I actually do have a pound USD positions. I have a long position on the pound USD before the CPI number comes out. I have a euro yen position, sterling yen position, Aussie yen position, all long, and I want to look at the market right now because the yen are getting pressured. Now, this is kind of the mechanics with the dollar Japanese yen, right? So if we take a look at the euro yen and the sterling yen, the euro and the pound, that's gaining. However, with the dollar Japanese yen dropping, you actually get that effect on the euro yen as well as on the sterling yen. Okay, so this is why you need to think of them as kind of not related. So USD pairs and yen crosses, they work differently. They have a different mechanics, right? So we got an increase in euro USD, pound USD, but we're not seeing that run up on the euro yen and the sterling yen. The reason is this: the dollar Japanese yen falls much faster than the gain in the pound USD and the euro USD, causing the Japanese yen to actually strengthen itself. Okay, so hopefully this kind of gives you that illustration that I was trying for months to tell you guys through the outlook, that dollar pair, yen crosses, separate the two of them. They have they're not really correlated or anything like that. Okay, so hopefully this gives you a good information. The poll is in Indonesian. Is it? Oh yeah, the poll is in Indonesian. Can I trade all news releases with a stop order? The answer to that is yes. However, things are gonna move differently. Like the NFP, you got one direction and it reverses. Remember what happened last week? We've got a trade that goes in one direction, the stop orders get hit, and then the market reverses on itself because of the fade, right? So with the NFP, there's a different set of strategy. So you missed out on the NFP numbers, but I can review it for you. So let's take a look at the NFP, which is on the 5th. And is the hourly time frame a good time frame to look at? Yeah, I would say so. Okay, so this is basically what happens during the NFP, right? So we got the market goes down, and then it fades up, right? So we were looking at two things, right? The initial reaction, we got market going down, okay? And then immediately after that, there's the fade. This is the fade, right? We see the market pull back up. Once it pulls back up, that's where it continues to go down. So the NFP moves differently. Every news event, if you trade the stop order or a limit order, is going to be dependent. Like the fade, for example, you should use the sell limit to continue with the trade. But can you use stop order? Yes, I would say the answer to that is yes. In terms of how extreme a movement is, that's questionable, right? Because as I said, all news are not created equal. Some has a higher impact, some doesn't have that high of an impact. So for example, the CPI numbers has a very high impact. The PPI numbers tomorrow, a lot of people kind of just, they don't really focus on the PPI numbers itself during release. But if you want to trade it, yes, you can trade it. The ISM manufacturing numbers, it really depends on the situation. Sometimes we look at the PMI numbers. Sometimes we don't look at the PMI numbers. So yeah, but I think what we did for this series is that we focus on the NFP. We focus on the CPI numbers. These two are kind of the most traded events, aside from any interest rate decisions. Okay, so the third one would be the interest rate decision. So yeah. So yes, you can technically trade all news using stop orders if you want to, but just keep in mind, not all news are created equal. Okay. All right, cool. I think it's been. Hopefully, you guys get an understanding on the whole thing. Yeah, pretty cool. So far, so good? Okay, cool. All right, guys, I want to thank you all for joining in. It's been a good day. I think the surprise to the downside was good. Kind of give the market less confusion. So I think, yeah, it is a great day to be trading CPI today as well. So hopefully I can give you guys a little bit of a guidance into what the CPI is, what to look out for, how to trade it, right? And with that, I'll see you in the next webinar. Good luck with your trades this week. If I don't see you in the webinar anytime this week, I'll see you in the Outlook on Monday. Thank you all. Have a great day ahead.